Welcome to the AACFB's 2023 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenter is Bobby Cowan with Y.E.S. Leasing. Y.E.S. Leasing is both a funding source member and a silver sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Y.E.S. Leasing, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box, and they should be answered by the end of the webinar. It should take no more than 30 to 45 minutes, and for those of you who would like to review this webinar at a later date, it will be posted on the 2023 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I'd like to turn it over to Bobby. It is all yours.
Thank you. Thank you very much, Monica. As I was graciously introduced, my name is Bobby Cowan. I am the VP of Broker Relations here at Y.E.S. Leasing. We're going to go over some of the basic guidelines and talking about some of the equipment that Y.E.S. Leasing likes to look at. So with no further ado, let's move on here from this intro slide to the next slide here. Now, I'm going to start with just our submission requirements. The way that our process works is we like you to send in the application signed and dated within the last 30 days, the last 3 months of the complete and full business bank statements, and along with the equipment invoice. Now, with those three things, we're going to review the banks and the invoice and everything and make sure everything qualifies, and we're going to provide you what we call a rough offer up front. And then you will go over that information with your customer. If the customer is okay with the rough offer, then we will, you'll let us know, send a copy of the driver's license, and then I'll send you out a questionnaire that you can send, that you can go over with your customer, send it back to us. We'll get everything fully underwritten. The reason we do that is because we are a subprime leasing company. With subprime, conversions are a little bit lower than if we're dealing with a paper type of rates. So we like to make sure that the customer's on board with our pricing first before we go through the process of underwriting a deal. Some of you guys may be concerned about the deal falling out after underwriting, starts to underwrite it. And it does happen occasionally. But like I said, we are a subprime lender. We are the place you go when you cannot get your customer approved elsewhere. So there's not a lot of reasons why we would decline a deal. So, and our pricing that we use the same calculators the underwriters use. So most of the time, pricing stays exactly the same, unless we find some other factors in the back end that add a lot more risk to the file. Then we may adjust the offer a little bit, but that only happens about 5% of the time. So this is what we like to see. We can get you guys pricing. Usually, since we don't fully underwrite up front, we can usually get back to you within about an hour with the rough offer and any other details that we need. So if you do send us something and you don't hear back from us within an hour, then just ping me so I can double check on your file to make sure we didn't miss it. Sometimes we are prone to miss an email here and there. We are human, so but just shoot a quick reminder email, then I'll jump right on it for you. My contact information is here. Phone number is 678-478-0152. Those of you who work with me know I'm really good about answering my phone. If I don't answer the phone, you're going to get a call back within about 5-10 minutes, unless I'm on vacation. And then, of course, there's always the email, Bobby, BOBBY at YESleasing.com. I'm always able to respond there. So let's move on to the next slide. So the kind of equipment that we like. It's no secret that Y.E.S. Leasing loves yellow iron construction equipment. So anything yellow iron, I have tons of flexibility on. And then we also do CNC, BNC machines. I've done a few of those, and we like these horizontal drills as well. So those are the types of equipment that we typically like to see and like to fund. Now we will look at other equipment as well on a case-by-case basis. So if you have something that's non-yellow iron, then reach out to me. Let's talk about it and see if it's something that we like. But basically, for all your excavators, skid steers, forklifts, horizontal drill packages, chippers, wheel loaders, all that good stuff. We like yellow iron. And like I said, I have a lot of flexibility, as you'll see in some of the programs that we have here. So let's go ahead and move on to the next slide here. Whoa. Yes, we do offer a variety of different programs. So let's start going over them right here. So you're going to see, we're going to talk about our standard yellow iron program. We also have a C pricing yellow iron program. So you get this program is better pricing than our standard. And we have a couple of options we'll get into. We have a story program that we'll go over here as well for our yellow iron construction deals that maybe they don't meet the qualifications for the standard yellow iron program. We also do private party sales for yellow iron, and we have a sale leaseback program that you can leverage as well for your yellow iron customers who maybe they have something excavators that they own outright, but they need some working capital and they'd like to leverage that piece of equipment to get some. So let's move on first to start talking about the standard yellow iron program and what the requirements are here. So here's the guidelines. Personal credit. Those of you who have come to the show and come to the Y.E.S Leasing booth, and spoken with me, know that we don't really have a minimum FICO score requirement. Every time I tell somebody that, they kind of giggle. But we do truly fund sub 500 deals all the time. So credit score is not an issue for us. So doesn't matter if they have a 460, a 360, a 250. If you can get one that low, I'd be seriously impressed. But we don't really consider FICO score as a requirement to get in the door with us. We do look at our underwriting model is, so we do look at the cash flow. So this is the reason we ask for 3 months of complete business bank statements. We want to see that the customer is at least depositing 50% of the cost of the equipment in revenue every month. So the example is here on the slide. If they're looking for they have a $50,000 skid steer per se, right? We want to see that they're depositing at least $25,000 in revenue every single month to qualify them for that $50,000 piece of equipment. Pretty simple. If they don't meet this requirement, that's where the story program comes in play. We'll go over that in a minute. Now, we do fund anywhere between $10,000 and $100,000. Used to be, I think we have now and moving forward, we'll fund anything from any yellow iron from $10,000 all the way to $300,000. So it opens up a little bit the bandwidth in terms of the types of deals we can fund and the size of the deals that we can fund. We also work with non-citizens. So your ITIN guys, send them on over. We'll take a look at them, and I do several every single month. So it is something that I can confidently say that we actively fund. So if you have any ITIN customers that you're not able to get approved anywhere else for whatever the reason is, send it on over. Let's take a look at it. You want to call me and talk about it ahead of time, no problem. But we'll look at those deals and we can get those deals done for you. Now, again, going over the application package, you send it in, we have to have the application. We have to have the last 3 months of the complete business bank statements and the equipment invoice. For yellow iron, sometimes I can work with an equipment link. But for the most part, it's always better when you have an actual invoice. It shows that the customer actually went through the effort of going out there, contacting the dealer or going out and seeing the equipment, showing that they really want this piece of equipment. But again, if you're talking about yellow iron, we can work with the link if that's all that you have. You want to send that to, and we'll go over this later on, but it's the email's apps@yesleasing.com, and just copy your boy, Bobby, BOBBY @yesleasing.com, and we'll get right on it for you guys. Now, the actual program for our standard program for our yellow iron, it's for yellow iron and vocational trucks only. So if you got you guys a bucket truck, or he needs a work truck, or it's a truck for a plumber with a bunch of stuff on it, so those specialized trucks, we do those, and those do qualify for the standard yellow iron program. Now, we used to only do 20% down, 20% advance payments on all our deals. Over the last couple of months, we've changed things a little bit, and we want to make sure that we're able to offer better terms to a degree to our customers. And the biggest thing that was holding customers from moving forward with us was usually the advance payment requirement. So with that, we created this standard yellow iron program with the 10%, 15%, and 20% advance payment option. So now your customers can get in with a little bit less down. So hopefully that will help you win more deals. I know it's helped us tremendously with our deal flow. We've seen a ton of applications come in. We've gotten a lot of deals in. We've doubled our volume, to be quite honest, for the last month. So it seems to be working. But yes, 10, 15%, and 20% advanced payment options. The max term that we'll do is 48 months program, and it's 48 months across the board. Just so you know, we don't go out any further than 48 months on these on our challenge credit customers here. Monthly revenue requirement, as we talked about before, is 50% of the equipment cost in revenue every month. And one thing that's important, and I run into this a lot with a lot of my brokers, equipment has to come from a reputable dealer. So we don't do private party sales for this particular program. We do private party. This doesn't qualify for these types of terms. Now, I've run into scenarios where you may have worked with a dealer or a vendor on other deals for better credit customers. And this particular dealer, for whatever reason, maybe they have instead of a 4.0 or a 5.0 rating, they have a 3.7 rating with some questionable, several questionable reviews, over the past couple years. We are very picky about the dealers. We want them to be, reputable dealers, because the difference between our customer and an A-paper customer is, if an A-paper customer's equipment goes down for whatever reason, whether it's the dealer's fault or it's their fault or whatever the case is, they're going to continue making their payments because they're going to protect their credit score. Our challenge credit customers, a lot of times that their credit score is already down where, they're not interested in protecting their credit scores. If we fund a piece of equipment for them, they go pick it up, and then 2 days later it breaks and stops, and then the dealer's not going to help them out, then basically they're going to tell us they're going to park it on the side of the road, tell us to get it. So when it comes to reputable dealers, we want to see 4.0, 4 stars or higher, typically with their Google ratings. So just keep that in mind when you send it over. And again, we fund anywhere from $10,000 up to $300,000. Moving on, let's talk about our C pricing yellow iron program. Now, this program is not driven by credit score. So it's not geared towards somebody that has a better credit score than somebody else. What we're looking at here is customers who bring in where the revenue that they bring in per month is at least 75% of the cost of the equipment that we're looking to purchase or that we're looking to fund. And this can be any yellow iron, up to $200,000. I think we may have even moved that up to $300,000, but I have to double check that. But up to, at least I know for sure, 100% we'll do C program deals all the way up to $200,000. And that will include these vocational trucks as well. So keep that in mind. If you got a guy that's looking for a bucket truck, which I see a lot because we do a lot of deals for tree guys. But those kind of trucks and stuff will be considered for that program as well. And again, the base requirement is 75% of the cost of the equipment. Now, the program options that we'll offer, if they qualify for the C pricing program, first and foremost, we're going to have underwriting. If we feel like if it meets this metric, this monthly revenue of 75% of the cost of the equipment, we are going to send that to underwriting just to kind of do a quick look at the deal to make sure that there's nothing on the back end, credit wise, that would, or background wise, legal wise, that would disqualify them for this program, so that when we send you the actual offer for a C pricing program, it should stick, because it's going to be a partially underwritten deal. But the main thing is I wanted to avoid having any problems which we've had in the past, where we give you rough pricing on the C pricing program. We get the deal in, underwriting starts to look at it, and there's history that kicks them out of the program and only offer them a standard price. It's really, really difficult to get somebody that you sold on the C pricing program to go and accept C, standard pricing with the higher down payment. So to avoid that, we do partially underwrite those C pricing deals that we feel would qualify up front, so that you can see you'll have more confidence in the offer that we give to you when we give it out. So first option's 10% down, so 10% advance payment with the C pricing, which is better than our standard pricing. Now keep in mind, it is still subprime, but it is better than our standard pricing. And sometimes people like that option. There's no FMV. So no FMV buyout on this. So once they make their last payment, and this is also true for all of our other programs, once they make their final payment on the lease, they own the equipment outright. So without any additional buyout in regards to having to do any FMV buyout at the end of the lease. That is for option one, 10% advance payment, and then with the better than standard pricing. Now, option two, if they so choose to go this route on the C pricing, is a first payment down option, and with a 10% of FMV buyout. So this is a great tool to use for customers that don't have all the money, that don't have 10% to put down to get into the equipment, or for your better paying customers who will, who are serious about, improving improving their credit by making their payments on time. Because this program, you get in with the first payment down. If your customer makes all their payments on time in the lease or within the grace period, we will forgive the FMV buyout. So they can basically get into this equipment with the first payment down plus the admin GPS fees, and then not have to worry about the 10% buyout at the end if they make all their payments on time. However, if they happen to have a couple hiccups here and there, then and it comes time for they're making their last payment on the lease, and it comes time to make the FMV buyout payment. If they don't have that full amount up front, not a problem. We can split that up into 8 additional payments. So that way they can still take care of the FMV buyout without having to stress so much about having to come up with such a larger sum of money. So we will split that up for them. Equipment cost, now for the Yellow Iron the C pricing program, minimum funding amount is $15,000. And then we will go up to $300,000 here, I think. Yep, we will go up to $300,000. Perfect. And the equipment, it must be from a reputable dealer, so no private party sales. Again, reputable dealer, as I explained before, is somebody who has a four or better rating. We would think. Terms can be anywhere from 24 months to 48 months. So they'll get the max terms that we offer with the better pricing. So moving on to the next slide, let's talk about our story program. So this story program is a Yellow Iron program, and we will look at some work trucks and vocational trucks as well. We just won't look at any like transpo trucks, no sleepers, no class 8s, no class 6, 7, and 8s, those kind of things. This program is for people something that's going to help them generate more revenue for their business, but they don't quite meet the 50% ratio revenue requirement. So for instance, using the same example as I used before, if we're looking at a $50,000 skid steer, but this customer does $15,000 a month in revenue, then in our standard program, they don't qualify. However, if this $50,000 skid steer is going to bring $10,000 a month in additional revenue, then we can look at it as a story deal and pitch it to our underwriting team as a story deal. And we truly do listen to the story. We want to know how this is going to help the customer. Ultimately, it has to help the customer increase their revenue, because otherwise, why even do it, right? So what we're going to do is we're going to basically give you the rough offer, and I'll let you know that, hey, this customer doesn't qualify for our standard program, but we're going to leverage our story program to help get this customer in this equipment. And the way it would work is we would basically set up an interview call with Peter, who is my manager of processing, and he will do the interview call with the customer. Typically, it's going to be a little more in depth than a traditional interview call, but it shouldn't take more than 15, 20 minutes at the most, unless there's a lot of information and that the customer needs to let us know. But if the interview feels like this is a deal that we can get through underwriting on our story program, then what we'll do at that point is we're going to need to collect $500 upfront of the closing costs from the customer. Typically, we do it on the same phone call, and then we'll submit it to underwriting for the full approval. Now, if underwriting comes back and declines the deal for whatever the reason is, then we're going to give the customer their $500 back. If the underwriting comes back and they approve it, but they approve it for different terms, let's say instead of 20% down, they want 25% down, or instead of 36 months, they say we can do 24 months. If anything changes in the terms that are different than what you had discussed originally from the original rough offer that we sent out to you, then we'll, if the customer doesn't want to move forward, then we'll happily refund their $500, no problem. If we do come back and the terms are confirmed, the same terms that were pitched to the customer to begin with are confirmed by underwriting and approved, at that point, we're moving forward to get the deal done, but if the customer backs out, we're not going to refund the $500. So just keep that in mind. When I send these story program offers out, I do put detailed information in there for you so that it'll help you to kind of explain to your customer how this is going to work. And if they decide to move forward, that, what's going to be required, so that everybody involved is aware of all the details. But this story program is amazing. I probably do 4 or 5 story programs a month. And it's been a great program for us. And it's it definitely works for a lot of our customers here. Now, let's talk about private party sales. So private party sales, the only asset that we're going to do for private party is a non-titled yellow iron construction equipment. These are your excavators, your skid steers, your dozers, bobcats, all those. We will also consider horizontal drills for the private party program as well. So every deal that comes in as a private party deal is going to require a virtual inspection. Typically, that's they're going to do an inspection via the phone. The seller is going to have to be able to be there to kind of complete the inspection with the customer, with the inspector. And then we're going to get an FMV report to make sure that the price matches up, that the selling price that is going for, it falls within the fair market value. With horizontal drills, we are going to require that a certified inspection by a certified mechanic will, to complete that inspection. So if we're looking, for instance, at a used Ditch Witch JT20, then we're going to require that inspection is done by Ditch Witch, the Ditch Witch that's in that area, in that region, to make sure that the drill is working properly, that everything's in place where it needs to be. Also, the inspection, with those reports, we'll know what needs to be done, and what needs to be fixed, and things of that nature. We just want to make sure these horizontal drills, they take a beating. So we got to make sure that those things are in decent shape before we decide to move forward and fund those. It's good for the customer as well, because the customer is ultimately the one that's paying for it. So they want to make sure as well that it's a good piece of equipment. The last thing we want to do is to fund something like that, and then a month later it breaks down because we didn't realize something, and then next thing you know, the customer's unable to complete their jobs or make money off the equipment, which in turn affects their ability to pay us. And so we want to make sure that everybody involved is aware of anything that needs to be done to the equipment, and also just to verify it's a good piece of equipment. And to make sure that we're getting the decent deal on this, that everything falls within the fair market value. Now, private party sales are a little bit unique in the aspect of meaning that we require that the customer go and by the equipment when we fund it. So we're not going to fund the equipment and let the customer pick it up later on. We want the customer to be there, send us a selfie showing us that they're there, or do like a video call or something showing us that they're by the equipment before we release it. So that way we don't fund something and then the customer goes to pick it up and then it's gone, right? So we'll make sure the customer's there before we fund the equipment there. And typically we want to try and get that done before 2:00 in the afternoon. Now 2:00 is not a hard cutoff, but sometimes with wiring money, there's a delay in some cases. So we like to get the money wired out before 2 p.m. That way, at least the customer, if there is a pause or delay somewhere, it still gets taken care of by, 3:30, 4:00 that day. And that way, then the seller sees the deposit, customer can take the equipment, everybody's happy. So, and that covers it for our private party sales program. Let's talk about our standard yellow iron other. So other means these could be, of course, this is this tier is for the private party and the story program tier. So we're only going to do advance payments of 20%. And sometimes, depending on the risk of the file and things of that nature, we may increase the advance payment accordingly. But 95% of the time, for our private party and story program deals, the advance payment requirement is going to be 20%. The max term on this is 36 months. And that's a hard 36 months. It's not, we won't go out any further than 36 months on private party or story program deals. And sometimes the standard yellow iron deals, if they're a little risky, once underwriting, takes a look at them, they'll fall in this category. Where the pricing factor doesn't change, but it just, instead of being able to offer them 10 and 15% advanced payment options, we can only offer them a 20% advanced payment option. And instead of going out 48 months, and we're only willing to go out 36 months. So occasionally that will help. But again, there's no price difference between the standard yellow iron other and our standard yellow iron regular program. But it's just more along the lines of the advanced payment options and max term is the main difference there. So let's move on here, talk about our sale leaseback program. Now, this is a good program for customers that need working capital to help with the job, or they just need some additional capital for whatever their business reasons or business needs are. Now, the only kind of equipment that we're going to consider for our sale leaseback program is going to be yellow iron, and it has to be non-titled. So that's going to be very important. Non-titled yellow iron. We can't do anything that's titled on our sale leaseback program. So we are looking at excavators like what you see right here, dozers, skid steers, those kinds of things. Now, the minimum value of the equipment is $65,000. That allows us to fund somewhere between $20,000 and $25,000. That's our minimum funding amount. Our loan to value is going to be somewhere, up to 50%. Sometimes it can be between 50 and 75% of the equipment value, but that's on a case by case basis. Most of the time, it's going to be 2 to 1. So the max we'll fund on the sale leaseback program is $75,000. Now, I do have a little bit of give there, depending on what the equipment is, but not a lot. If the customer is looking for $100,000 or something like that, and they have a piece of equipment that would qualify for that, and you're interested in it, then we may be able to do it for you. If you have something like that, that's the deal that I want you to pick the phone up or send me an email about. Pick the phone up, give me a call, or shoot me an email so we can discuss it. I like to bring those deals up to the upper management first before we have our pricing teams review it and price it. So, but I do have just a little bit of leeway there. But for the most part, we're going to stick pretty close to that $75,000 price cap on the sale leaseback program, non-titled yellow iron, and again, minimum value $65,000. And it's going to be on our standard pricing type program. Nothing special, nothing different about the pricing there. So one thing that I wanted to mention that I didn't mention earlier is for our standard yellow iron program. Let me see if I can go back up here to the standard program here. This program right here, standard yellow iron. For the month of December, we're running an amazing promotion. So if they qualify for this particular program, up to 40, they qualify for the max term of 48 months. We are offering this promotion where if the customer makes all their payments on the lease every month for 36 months, or within the little grace period that we give them, we will forgive the last 12 months of payments. So if you have a good customer that you can't get approved elsewhere for whatever the reason is, or you got a customer that's like really serious about rebuilding their credit and making their payments on time, this promotion is a great tool to use to help them get into the equipment and give them an opportunity to put their money where their mouth is, right? Make their payments on time. So if they qualify for the 48-month term, and it's yellow iron only, this is not for vocational trucks, yellow iron only, then they make their 36 months payments on time. We'll forgive all 36 month payments. That is, all 36 month payments had to be made on time. We will forgive the last 12 months, and they will own the equipment outright. So if you want more details on that, please reach out to me and let me know. That program is running for December only. That means it has to close this month. It can't close on January 2nd. It has to close by the end of business on December 31st. So going back down here, we have 2 offices. All right. So I joke around a lot. I say, hey, the money's in Miami, but that is truly where the money's at. So that's where our accounting office is, our collections, and everybody's down there. Our owners are down there, Adam and Quaid. they are down there in Miami, in the beautiful, enjoying that weather in that beautiful city. And then our sales office and myself, we're located here in Atlanta, in the Atlanta area. We do have an office in Woodstock, Georgia, up there in Cherokee County. If you happen to be out that way and want to stop by, just, let me know. And, we can maybe make that happen. Or if you're in the Atlanta area and want to get together and, have a cup of coffee and talk about some things, by all means, I'm always up for a cup of coffee. Absolutely 100% of the time. So with that being said, that pretty much concludes everything. One thing I want you guys to know is I want you to, if you my information, this is my phone number, 678-478-0152. And my email again is Bobby, Bobby, at YESleasing.com. If you have any questions or concerns, or anything, just reach out to me. We can communicate via email. We can get on the phone and talk about it. Now, one thing I do want to say, because I didn't go over too much of the general or truck program here, but we are looking at we will look at non-yellow iron equipment through our generalist program. There are certain pieces of equipment that we'll consider. If you have something that's non-yellow iron, that's $75,000 or less, and reach out to me. And it's also one of the main things is it's got to generate revenue directly. It's got to be something that's going to help this customer make more money directly. It's not like a stove in a restaurant or a fryer or anything like that, but something specific. Like let me think. Like the CNC BNC machines, we consider those general equipment. You have like an X-ray machine for a dentist, something like that. We consider, and other types of manufacturing equipment, but it has to generate revenue directly. So as long as it generates revenue directly, and it's no more than 75,000, give me a call. Let's talk about it and see if we make it happen. As far as trucks and trailers go, we are doing dry vans and reefers and things of that nature. Trucks, we are currently still doing them on a case-by-case basis. Not sure how much longer, but reach out to me if you have a truck. We can talk about it. There are some restrictions we have in place for that particular asset. So with that, let's go to, let me stop sharing my screen here, and we can go the Q&A.
And just as a reminder, if you have a question, go ahead and type that in right now and we'll get them answered.
Absolutely. So, Doug, let's see. Can I share the presentation? Yes, I can. I can send Doug, if you reach out to me, send me an email, Bobby, Bobby, at YESleasing.com. I'll send you the guidelines and the webinar so you can see it. Also, it's going to be posted on the YouTube page for the AACFB, so make sure you check it out there too. All right, so here we go. Let's see. What equipment value does Y.E.S use for non-titled yellow iron sale leaseback? So we look at two things. We look at the fair market value of the equipment, and we also look at the auction value. So for the most part, we're gonna lend on a mix between, like an average between the two. So when we look at the value of the equipment, we're going to take the fair market value and the auction value into consideration to determine if it's something that we can do for you. So when you send a sale leaseback over, the best thing to do is just let me know it's a sale leaseback, last 3 months banks, application, and all the information on the equipment, year, make, model, hours, any attachments that are on there that would make it more valuable. Those are the things that we're looking for. And then we'll do a preliminary review of the equipment, check out some comps just to make sure that the value is where it needs to be at initially. And then if we feel like we can get it done, we'll shoot the rough offer to you. But after that, if the customer is good with the numbers and we want to move forward, then we're going to require the inspection to validate that our numbers and what we came up with on the rough review of the comps is true, and the values there. So will we consider plumbing equipment? So this is a question from Eric King. Yes, it's possible. It is possible. We will consider at it. We just need to know exactly what you're talking about. We don't do a ton of like plumbing equipment per se, but so when you send something over that's something like this is kind of generalist equipment for us, Give us a description of what the equipment is, what it does, and how it's going to help the customer. Those are the three things that we're going to be that's the three things that we ask when we're looking at equipment we're not familiar with. So if you have those three things answered for us, and then of course the last 3 months banks in the app, then we'll look at it and see if it's something we can get done for you. If you ever have just a piece of equipment that your customer has or is thinking about purchasing and you don't have a full package yet, and you want to send it over to see if it's something that we can do, absolutely send me an email. Just include a link, and they'll give me download me on what it does and how it's going to help the customer. All right, that looks like that's all the questions I have here. Does anybody else have any other questions?
All right.
Looks like it's it. Is there another one in here? Oh, wait. No, thank you. Thank you, anonymous attendee.
All right. Well,
yeah. So if anybody has any questions, feel free to email me, Bobby, BOBBY at Y.E.S Leasing. Again, that's my email, or just give me a ring.
Great. Since there's no more questions, we'll wrap it up. I want to say a big thanks to our participants, especially our valued funding source member and silver sponsor, Y.E.S Leasing. Thanks for a great job. We invite everyone to meet with Y.E.S Leasing in person at the AACFB annual conference coming up next April in Phoenix, Arizona. Thanks again for joining us. Have a great day.
Thank you, everybody.